You know that insurance bill? It just shows up every month or every year and poof, the money is gone. But have you ever really stopped to think about what you're paying for? Yeah, most of us just kind of accept the number, feeling like we don't have a say in it. Well, you know what? That's all about to change.
It's a really frustrating feeling, right? You see that number, and you have no idea what the logic is behind it, or why it seems to creep up over time. It can feel like a total black box.
But here's the thing. It is not a black box. And today, we're going to open it up. We're going to give you the tools and the knowledge to finally understand your premium and, way more importantly, to actually take control of what you pay. So, let's dive in.
Okay, first things first, we've got to get on the same page about what an insurance premium actually is. This is the foundation for everything else we're about to talk about.
So, put simply, your premium is the fee you pay to transfer your financial risk over to an insurance company. You're paying them to have your back if something unexpected happens. It's really important to remember it's not like a savings account that you get back. It is the price for that peace of mind.
And this, right here, is such a great way to think about it. Just picture one giant community pool of money. Everyone with a policy pays into that pool. Then, when someone in that community has an accident or a claim, the money to pay for it comes out of that shared pool. Your premium is basically your ticket into the pool, and the price of that ticket all depends on how likely the insurance experts think you are to need a payout.
So how in the world do they figure that out? Well, insurers have a whole process for this called underwriting, and it's where they look at a ton of different data points to figure out your personal risk. You can think of them as professional risk detectives.
And the things they look at are really specific to what you're insuring. For your health insurance, for example, your zip code can be a huge factor, because healthcare costs vary so much from one city to the next. For car insurance, it's way more than just your driving record. In most places, they'll even check your credit score. And for your house, something as simple as the age of your roof can make a real difference in what you end up paying. And let's just zoom in on that one for a second, because it surprises a lot of people. Your credit, why does it matter? Well, insurers have found this really strong statistical link between how someone manages their money and how likely they are to file a claim. So improving your credit score isn't just for getting a loan. It can literally lower your car insurance bill.
Okay, so that's what the insurer looks at, but there's one massive lever that you get to pull that has a direct impact on your premium. And honestly, this is probably the most important choice you'll make when you're buying a policy.
It's this right here, the trade-off. Your deductible is how much you have to pay out of your own pocket before the insurance company steps in. So if you agree to take on more of that initial risk yourself by picking a high deductible, the insurance company rewards you with a lower monthly premium. If you want them to pay almost right away, you'll choose a low deductible, but you'll pay a higher premium for that extra security.
And that brings us to this crucial point. Seriously, this is your guardrail. Saving, say, $30 a month on your premium sounds great, right? But not if it means picking a $2,000 deductible that would totally wreck your emergency fund if you actually had an accident. Your deductible has to be an amount you could genuinely come up with on short notice without causing a total financial meltdown.
All right, now we get to the good stuff, the part you've been waiting for. We get the what and the why. Now let's get into the how. These are real, concrete actions you can take to lower that bill.
Okay, this is your toolkit. Number 1, just call your agent and ask about every single discount. You would be shocked what's out there. 2, don't assume loyalty pays off. Shop around every year or so, because new customers often get the best deals. 3, bundling your home and auto insurance usually gets you a pretty big discount. 4, we already saw this, but working on that credit score pays off. And finally, 5, review your policies. Does your 15-year-old car really need full collision coverage anymore? Maybe not.
And please, do not underestimate the power of that first step. Just listen to this quote from an insurance advisor. It shows how much money is just sitting on the table because people don't ask. A single 10-minute phone call could put hundreds of dollars back in your pocket. I mean, that's an amazing return on your time.
So, as we wrap things up, let's just reframe our goal a little bit. It is so tempting to just chase the lowest possible number on that bill. But you know what? That can be a trap.
This is the key question you should always be asking yourself when you're comparing different insurance quotes. Is the rock-bottom cheapest price really the best option for you?
And the answer is a very clear no. The real goal isn't just the cheapest premium. It's about finding the best value. And that means getting the right amount of coverage for your specific life, for your risks, at a price that actually fits your budget. A super low premium is totally useless if the policy is full of holes that leave you exposed when you need it the most.
So that brings us to the end. But really, it's more like a beginning. For you, you have the framework now to take control.
So I'm going to leave you with this question to chew on. What is the one thing, just one, from that toolkit that you're going to put into action this week? Are you going to make that call about discounts? Are you going to finally shop around? The power, it's in your hands now.